At the A4ID Responsible Business event on Tuesday the 17th of July 2012, TimWood of White & Case LLP spoke on the legal assistance his firm provided Nexii when setting up the Impacts Exchange. He also discussed some general issues with impact firms looking for international investment.
In particular, is a neat segue from giving an explanation of the theory of impact investment, and obviously from Vinay as well, talking about funds that actually invest in these types of companies. I'm going to sort of look a little bit more at the prosaic side of things in terms of how companies can actually access this kind of funding, and particularly how this is achieved with the IX, which Tams has mentioned. So it's a neat segue topic-wise, but I'm afraid my slides are nowhere near quite as exciting as yours. They're very legal, so okay. Well, I also have a disclaimer, but okay. It's not as exciting as yours. Okay. So just a sort of quick introduction to what I'm going to talk about. First of all, I'm just going to explain a little bit about the relationship that my firm, White & Case, has established with Nexii and the work that we've done on the IX. And then I'm just going to talk a little bit more about some general legal considerations that companies will encounter if they're generally looking for funding, particularly on the IX, but I think generally speaking. Okay. So we came across Nexii, and Nexii came across us through a portal called Trust Law. I'm not sure if people have heard of this, but it's a service set up by Thomson Reuters Foundation Service. It's basically a hub where NGOs and social entrepreneurs who are looking for, who don't have financial means, are looking for legal advice, and they can bring their opportunities to the hub, and then law firms that are interested can seek the opportunities. We saw the opportunity to work with Nexii on the IX. As Tamza mentioned, it's a platform for investing in publicly listed companies, and when I think it's pretty much there. It will be and is the world's first publicly regulated social stock exchange. We saw the opportunity. The opportunity involved, or Nexii asked us for some assistance with drafting a template suite of documents which social entrepreneurs would use for listing debt or equity on the IX, and also some general guidelines that the board of a company could look through in terms of what would be their consideration, general corporate considerations before in preparing for listing on the IX. The procedure we followed was we made our pitch to Nexii. Hopefully we were a winner amongst many others. I don't know.
We were, actually.
Okay. We then sort of entered into conversations with Nexii to assess exactly what they were looking for, what the documentation they were looking for was, and what it would do. We then set about drafting the documents, which we based on documents that because the IX is set up in conjunction with the Stock Exchange of Mauritius, we helped base those documents on other listing documents that had already been used for listings in the Stock Exchange of Mauritius, and also with our own proprietary information. We engaged with the Stock Exchange of Mauritius to help review the documents, and then we're basically finalising and hoping to go live pretty soon with these documents. Okay, so just to move on, really this is hopefully a bit of an overview of some general legal considerations that companies would need to think of when they were hoping to seek financing in the social impact sphere. We'd touch on some initial considerations, corporate regulatory, the advisors, how they might list, a touch on the IX rules themselves, and ongoing requirements and responsibilities. So I guess a company, when it's first thinking about listing, it really needs to consider all sorts of issues and considerations. Particularly, I think mainly a directors of such a company will need to realise that there could be some serious liability implications. They need to make sure the information that goes in any document that offers the securities to the public is accurate. They will need to be transparent with their information as they go forward, and Obviously, this information the investors will need so they know exactly what they're investing in. It's not just information that's provided at the moment of listing, they'll have ongoing requirements as they go forward. The management of the company will need to be reorganised or clarified, and you'll need senior decision makers, you'll need legal counsel, financial officers, and an impact performance director who will look at the particular impact requirements for listing on the stock exchange. I should probably make it clear that the difference, the added feature of this stock exchange is, rather than any other stock exchange, not only are you going to have to jump through certain legal requirements as a company in terms of your finances and how you're set up as a legal entity, you're also going to have to abide by certain requirements as a social impact company, which we can get to in a bit. So the management will need to have clear strategy as a sustainable business, and just make sure that it knows exactly what it will mean running a company that's listed, i.e. That's in the public eye. When it comes to the market, if it's listing shares or debt, then it will need to be certain that when it comes to market, that people will actually want to buy the shares, and that it has a decent trading record, has assets that people are interested in investing in, and will obviously want to check that the market conditions at that time are favourable for investing. And then obviously we'll have to assess its impact, its social impact requirements. So does it have certifications from social impact bodies? Has it implemented social impact related performance measurements and monitoring systems? Okay, I'll try and skip through this pretty quickly. Be also the corporate considerations. Properly incorporated, do its articles of association, are they set up for it to be a social impact company? Does it need to sort of have any rearrangements in terms of the assets it has internally? Are there any particular sort of shareholder arrangements that need to be unwound that would be detrimental to it being a listed company? It's got to make sure that its employees have proper contracts, and any investor that's coming into a company that's listed on an exchange would want to know exactly how its employees are employed and how its management is set up. In terms of corporate governance, wherever the company is based, there will likely be regimes of corporate governance which it will have to abide by, so it needs to make sure it has policies in place for dealing with that. An example of that might be that in many jurisdictions, a chairman and a chief executive couldn't be the same person because they have too much power. So it's to make sure there's a division of power there. Checking on key contracts, so if they're issuing new debt, then they may already have key contracts which restrict the amount of additional debt that the company can take on. So it's making sure that when they list and list a bond, that they don't breach any of their existing contracts. Just making sure that if they have any particular intellectual property that's patented or their trademarks, make sure that their real estate ownership is in order, and if we have share or pension schemes, that those are in place for incentives for employees. And lastly, just looking at litigation, if there are any sort of litigation issues or insurance issues, the company's on top of those. That sort of information would have to be disclosed if the company was coming to listing on a public exchange. Okay. So, just looking at regulatory requirements. Obviously, if a company is looking to list on the IX, then it has to abide by the IX rules. So a fairly detailed set of rules which sets out the various legal financial requirements that it has, including the social impact requirements that it has. It will also have to abide by various sort of legal jurisdictions. Wherever it's incorporated, it will have to abide by its own corporate jurisdiction laws. Wherever the stock exchange is based, in the case of the IX, it's based in Mauritius, so there will be general corporate legal regimes to abide by there. And then, depending on the investors that you're targeting, you also need to be very aware of legal regimes in those jurisdictions. For example, in particular, in the US, the regime for listing publicly offering securities is very strict. and actually is far-reaching and reaches outside of the US as well as inside. So any company that's looking to publicly list has to be very aware of US considerations. Then there are also just general sort of international guidelines and standards. One might be the International Capital Markets Association. That's not law as such that you have to abide by, but it's market practice. A company that didn't abide by market practice then might not be such an interesting proposition for an investor. Okay. So plenty of advisors. I mean, it depends also on the size of the company, but the bigger the company, usually the more advisors, or the more for us lawyers. So they, as advisors, assist with the corporate structure of the company, the legal aspects, the financial aspects, advising on employment, contracts, etc. The company would perhaps already have advisors it had engaged, but it would it would invite others to pitch, and those advisors would be engaged under an engagement letter which set out the scope of their advisory roles, etc. In the context of a listing on the IX, it's a requirement that each company or issuer has a nominated impact advisor and an impact verification agent. Just to give a sort of brief outline of what they do, a nominated impact advisor assists the company with the social impact aspects of its listing, so making sure that it abides by those impact requirements, social impact requirements. And then the impact verification agent is would be appointed more on an ongoing basis. So a company that would be listed on the IX would have an obligation to report its social impact performance. And this agent, the impact verification agent, would assist with producing that report on a yearly basis. There'll be the usual legal lawyers, auditors. Auditors would be there helping sort of put together and finalise the financial statements, because an investor would want to know about the financial history of the company. And then there may be, if there's a bigger listing, then you may have corporate advisors who would advise about the markets and the pricing and what have you. Similarly, PR consultants to generate press interest. If the company specialises in a particular industry, then investors might want to have particular information about its performance in that industry. So you might have specialist advisors providing reports along those lines. Okay. There are various different means of listing. I'm not going to go into those. They're funky names like introductions, offers to sale, offer for subscription, different ways effectively of the company coming to the market. And that would just be, the company would have an idea about which would be the most suitable means of listing. Okay. So just, I've mentioned this a few times, for listing on the IX there are certain impact assessment requirements. There's sort of come under four broad categories, so that the company would need to have a clear primary social or environmental purpose and intent. It would have to sort of follow a theory of change, so a long-term theory of social impact. They would need to make sure and demonstrate that it has performance measurement and monitoring systems in place for ongoing performance measurement. And then it would have to clearly show it has a sustainable business model and is correctly oriented in the market. In terms of other listing requirements, I think I've touched on these before. Usually, when coming to the listing, it would have to demonstrate its financial history. Also, if it's able to, it's been in the market for a period of time, its impact history, its social impact history, and certain other requirements there as well. Those requirements can be waived by the Stock Exchange of Mauritius, who are the ultimate arbiters of whether a company can be listed or not. I think we touch on the listing document. This is really the key document. This is the document that will be sent out to the investors, which will have all the information about the company. This is what we've been helping Nexii when producing a template document. That document will set out the financials, the impact reports, the terms of the debt or the shares that are being issued, and have a big section about risk factors, which will assist the investors in terms of what the potential risks are when investing in this type of company. Unfortunately, there are always fees when you list as well. Okay. Just finishing off, really, there's as I mentioned, once a listing is achieved, that's not the end of it. There are ongoing requirements as well, which the management of the company will need to continue to uphold. So there are the ongoing financial statements, which will usually be yearly. There's the social impact report, and the company just needs, the directors and the management needs to be aware that it has that obligation to make sure that all that information is true and correct whenever it's issued. Also, if the company enters into any significant business or contracts, then that would usually have to be disclosed, and that might be disclosed on an ongoing basis through the stock exchange. Okay. Just a final point that I've mentioned a few times, that there is the ongoing corporate governance that the management needs to continue to abide by these rules. If it doesn't abide by the rules, then there are potentially difficult liabilities and sanctions, and that's something that they would need to be aware of. Okay. Thank you very much.